Good morning. My name is Jim Andreessen. I'm an insurance and financial representative for Country Financial. I started my practice 20 years ago right out of college. My office is in downtown Tinley Park, and I help a lot of people that you people deal with every day. Most of my clients all come to me through referrals, whether it's existing clients, mortgage people, real estate agents, etc. And I try to make sure your properties close on time. So my specialty is really things like auto and home insurance, life insurance, and retirement planning. And how I can help all of you is to make sure your paperwork closes on time. Like I said, I work with a lot of mortgage people in the area. They'll send me the real estate information, appraisals, mortgagee clauses, etc. And I'll make sure they get all the right papers so they close on time. Ideally, I can get the quote done and back to the person in less than an hour. And I receive plenty of calls from people 2-3 days out of closing, and they need help trying to make sure they don't lose the deal. And we can come through and help them on that. Ideally, a little bit more time is helpful so we can get it done. But we're really good at helping people get the job done. We have a very successful team. We just hired an additional person the other day. We received Agent of the Year award the last and that's really what I do. I just try to make sure people are taken care of. We have the JD Power Award for the #1 home insurance policy in the state. And if anybody's going to complain, it's during claims time. And we do a really good job of taking care of people. So in addition to the fact we're helping them for your closings, we make sure we stand behind them when they need us so we can help them. I'm sure you have various questions and you're welcome to type it in and we'll get back to that as time goes on, and that's fine. But overall, I help a lot of people with home insurance and auto because you normally bundle them up so they get extra discounts and that kind of thing, and that's fine. I help a lot of clients with life insurance because as they're buying property, they want to make sure if something happens, the family doesn't lose the house. And I've personally delivered more benefits in the last 2 years than I care to comment on, but we've done a really good job helping people. So in a crisis, the family is able to keep the home and people can still go to the same schools they wanted to go to, etc., to maintain their quality of life and give that family a fighting chance. And I help a lot of people with retirement planning. And that may be consolidating old 401ks, working with IRAs, trying to make sure their investments are taken care of in a way that they're comfortable with. Because some people want to be very aggressive and that's fine. And some people want to be more safe and that's okay. But you try to do a good job for people and help them out. And that's an overriding principle on my operation for about 20 years. And that's one of the reasons why we're heavily referred, because I want to make sure they're taken care of the right time when we're first setting it up. But as we're doing periodic reviews, preventative maintenance kind of things, you'll make sure when they call you because they need you, you don't let them down. And I take a lot of pride in helping people and making sure they are taken care of. And that's an overall crux of what I do every day. And I can be a real asset to you to help make sure your deals close on time and your people get the service they need with good rates that'll make you look good, because referrals borrow trust. And anybody you send to me, I want to make sure I'm making you look good in the process to help you. So that's a very brief overview of things. But in short, I just try to listen and help people. And that's a very short summary of things. John, do we have any questions on there?
So typically what, for a new home buyer that's never bought something before, what is the policy that they're getting and what does it cover?
Sure. So this is important. There's a lot of companies out there and some of them advertise on TV and they're selling what's called a broad form peril policy. And that's really more limited than it sounds. When I sell a policy, the home itself is listed at replacement cost. the roof is listed at replacement cost. And when I've had clients that have had fires or tornadoes, etc., we're giving them enough to rebuild their home. In fact, if the home is newer than 35 years, they're going to have extended replacement costs. So if we were to budget, say 400,000 to rebuild that home, and because of cost of labor and materials going up as it's happened over the last number of years, let's say it's going to cost closer to 475 to fix it, we've got enough money in reserves to take care of that. So their home can be rebuilt without trying to say, here's a depreciated dollar amount because the home is 20 years old. We're just trying to help them rebuild it the way it is. And likewise, that extends on to their personal property. Personal property is listed at replacement cost. Maybe their furniture is 5-10 years old. If they have a fire, etc., they're going to have to go out and buy brand new stuff. And we've got money sitting there. So we're not giving them garage sale values. We're helping them replace their items the way they should be done. So they're taken care of in a crisis. And when we're writing policies, that's where the due diligence comes in to make sure if they have a finished basement, we should be talking about sub pump and sewer line backup. It's one of the more frequent claims I get. And I want to make sure we're not letting people down in a crisis. So that's a very brief overview of the type of home insurance a lot of people buy, because they want to make sure if the common things happen, they don't have to get a construction loan to finish the job. They don't want to realize, well, the home coverage ended here, but it didn't get the job done. And they need to go out and take a loan to finish it. They're not going to have that problem with us because we made sure we did it right the first time. And likewise with the auto insurance. On newer vehicles, we give people replacement cost. Most policies out there are actual cash value. So if you bought a brand new Mercedes and we drive it off the lot and it's worth 5-10 grand less, it gets smashed up, you're going to get that 5-10 grand less. With us, you're going to get the value of the vehicle on the lot. So you can go out and get a brand new car, just like what you lost, and not have to worry about the depreciation. That's a big asset for a lot of people, especially when they're buying new vehicles like they are right now, because in a crisis, we will give them more money than they would have had otherwise, so they have a better experience.
How are the policy costs figured in like new home sales?
Sure.
Is it just based on the price of the house?
Yeah, and this is really helpful. Ideally, if the mortgage company is able to give us their mortgagee clause, but also the appraisal is a big help. A lot of times I will discover square footage is wrong. On real estate listings, they may list the home at 1,800 square feet. The appraisal may come in a little bit different, and you want to make sure it's listed appropriately. So you have to figure out the replacement cost of the home. And from there, that's the biggest contributing factor to a home premium. A lot of times, if you're insuring a home, say close to $500,000 in this geographic area, you're probably looking at generically $1,500 to $1,800 a year as far as premium is concerned. But it really is based off of the type of home it is, the number of bathrooms, square footage, type of flooring, etc., and the age of the home, to make sure the rebuilding cost is adequate, which the bank wants to make sure is adequate because they're putting up the loan to cover it. And they want to make sure the insurance is correct. So I do with a lot of mortgage people, especially in the last week or two before closing, to make sure they have exactly what they need so the closing goes without a hitch.
What about when there's home improvements or renovations done? Are they supposed to report that to you?
Yes. So let's say they put a new roof on the house. Country gives a new roof discount. So if you're selling a home, one of the better things you can do is if you can get any kind of work orders that show when improvements were made, so you can show it to the buyer, of course. But if we can show when the work's done, that can make the insurance cost less because of the new roof discount. And that can be a big thing. And there's plenty of times my clients are buying new property and the shingles look new, the house looks new, and the seller has no supporting paperwork to show when the roof was done. And then it's more of a challenge because you're trying to find, work orders or, work permits for a village to try to show how old that roof is. But if you have a newer roof, that can be a huge marketing advantage as you're trying to showcase properties. And likewise, if kitchens are redone or bathrooms, etc., that can make your listings look amazing. And that information helps me too. So if you bought a home, let's say you bought it for 400 and you put 50 grand into fixing things, and you want to make sure those additions are covered because you made the bathroom nicer or the kitchen nicer, yes, please tell me so I can adjust the policy. Premium difference is minor, but in a crisis, you're going to want the help. So I will meet with my clients once a year, maybe once every other year, preventative maintenance kind of things to make sure as they're making those improvements, we're taking care of it appropriately, because I want to make sure I'm being fair to them when they need us, especially if they finish a basement that maybe wasn't finished when they bought the home. You want to make sure that's taken care of and the sub pump is talked about, because if they bought it and it was a concrete shell, but now it's got carpeting and drywall and maybe a home theater down there, they're going to want some help if they get a lot of rain and the city sewers back up or something. And I don't want to let them down. So as those kind of changes are made, it's good to update stuff. Yeah.
So if a home buyer does a lot of renovations and the policy needs to change, do you get like a updated appraised value or?
No, I don't need an updated appraisal. Like, let's say you bought a house and you have it fixed up. You just need to tell me what you did, and that's fine. An appraisal is helpful when you're buying or refinancing a home, but it's not absolutely necessary. I truly don't absolutely need it, but it's very helpful because it has pictures of the property and has a square footage on it and the number of bathrooms and those kind of things. And then it saves me time asking the home buyer all these questions, because they're not trying to talk to me too much. They're just trying to get it done, let's be honest. And I just will make sure your loan closes as smooth as possible. So those are a few things I've done to streamline the process, as opposed to keeping them on the phone and asking them all these questions that I can really get another way and probably with more accuracy. And that's okay.
Do those policies cover mechanical, like furnace and AC?
Well, if the mechanical breaks down because it's just old and it breaks down, that's not going to be covered by any home insurance policy in the state. And I'm licensed in a lot of states around the country. Mechanical breakdown because the item's old. I don't know if your agents sell things like home warranties or home shield, things like that would probably cover that better than anything I can do. But if there was a fire or if there was a sub pump malfunction and that furnace needed to be replaced, then yes, in those cases, we would absolutely do it. But it's not a maintenance contract. It's something sudden happened and we don't want to pay for this all ourselves kind of contract. And that's really what it boils down to.
So as agents, we deal with a lot of obviously home buyers and sellers.
Yep.
Occasionally we get a lot of renters.
Yeah.
Different times of year.
Sure.
Can you talk a little bit about like rental insurance?
Yeah, I can actually answer that question two different ways. So if you have somebody and they are just renting a place, maybe they're leasing a home for a year or whatever, we can write renters insurance and that's fine. And that will protect their personal property because they don't own the home. They don't need traditional home insurance. But if something happens, chances are they are going to want some help replacing the personal property that is damaged or destroyed. And we do that all the time for people. And some of them are college students, some of them are traveling executives of all different walks of life, and they're renting, and that's fine. And I can help them. Likewise, if you have people that are buying homes as investment properties, we cover that too. And I know a lot of people. I was working with somebody just yesterday who owns a lot of different homes, and he will buy them, fix them up. Sometimes he flips them. More often than not, he is doing a rent to own type setup. So we'll make sure the property, the structure itself is covered, even in case the renter manages to destroy it somehow, because it's not their place. So they might not be taking care of things the best way, but we can cover that from both angles. Yeah.
How much do those policies cover?
How much do they cover?
Yeah, or can they cover?
It really depends on what they're trying to cover. So if it's a tenant policy, if they are renting a home and they're going to be there a certain period of time, They need to tell me how much coverage they want for personal property. There is no hard and fast metric to it. It really depends on what they are trying to do. And that can be replacing all their personal property down to the last pair of shoes if they want it to be. A basic policy will cover $30,000, and it's probably about $150 a year. But if they have some nicer things, if they have jewelry, art, or if they just have a lot of personal property, they need to tell me what makes them comfortable, and we'll take care of it. Some of them have a lot of personal property, and that's fine. You just want to be fair without overdoing it. So if something happens, we have enough to take care of what they really need. And one thing you might want to tell people in general, whether this is for your own home insurance needs or anybody, take pictures. You don't need to prove it to me, but most people in a crisis forget what's gone. And I've been in homes right after the fire department got out because the Christmas lights got a bit too hot on the outside of the home. And that was a very challenging morning. And we were there and we were able to see what was damaged or destroyed, and that's very helpful. I know other people that their homes burned to the ground. And if they lived there long enough, these people lived there over 30 years, they had a very hard time remembering what was in various portions of the home. And the pictures are not there to prove it to me. But in a crisis, most people need to jog their memory. And we all have smartphones these days. Take some pictures, save it in the cloud. But in a crisis, it will help you quite a bit.
What other policies might be helpful?
Well, like I said, most people, when we're first meeting them, they need home insurance because of the closing. And we'll traditionally bundle auto insurance in there as well because they do get nice policy discounts for each other. And we have a very good auto insurance plan. We make sure the liability is appropriate because that's what really is at risk. We are protecting your income and assets. And as much as a lot of people wanted to talk about deductibles and the type of vehicle they have, which are important, the liability is really what's protecting you, because if we injure somebody more than the policy coverage, they can garnish wages up to 25%. And I don't want my clients in jeopardy. So we make sure the liability is appropriate. Things like life insurance, I help a lot of people with that, whether we're planning for the future and we want to make sure there's a policy that'll last there forever, or we have young children and we want to make sure we have enough income replacement. So if something happens to us, like I'm married, Jamie and I have been married 18 years now, we've got 3 great kids. And if something happens to me when I'm out riding my Harley or whatever else, she's got enough money coming in. She's not going to lose the house. The kids are still going to go to college because we did a little bit of planning. And those policies are relatively inexpensive. And that's a really good thing to help them. And one of the biggest assets I can do to help you is also retirement planning. And right now, everybody's doing their taxes, and your accountant should be helping you understand a few ways to lower your taxable liability, such as contributing to an IRA. Depending on your setup, depending on if you're incorporated, you may want to start a 401k for yourself, or you may have another client that needs that. I work with a lot of individuals. I work with a lot of businesses in the area, and sometimes we're part of their HR department because we're helping out with their benefit program. We're helping out with the 401k. We're helping out with the retirement. I have a very broad skill set, and I help a lot of people along with my team, just try to help them get their job done. And that's a question I get a lot of times. I have a lot of people. I was meeting with somebody the other day. She's a nurse. She's worked at 3 other places over her career. She's in her late 40s. And she's like, hey, I've got 3 old 401ks. She has no IRAs. She's not making any fresh contributions, and her current company is not offering any retirement plan. So we're going to review, does it make sense to consolidate the IRAs? And if it does, fine. And if it doesn't, I'll tell her straight up to leave it there. But she should be putting away more money for her retirement to try to help her. And when we do that, we talk about investment strategies that are appropriate for what they are trying to do to make sure it's operating correctly within their tolerance. And that's a huge asset. So I take care of the insurance side of the house and the investment side of the house for a lot of people. And I'm happy to help them out.
So one of the questions someone
Yeah,
asked was about whole life.
yes. How so?
Can you-
Just whole life in general, or?
Yeah, can you explain it? Like
Sure.
how people use that as a financial tool?
Yes, you can. Sure. I know some people that are big into investment properties and they will use the cash value of whole life insurance to finance some of that.
Mhm.
That's 100%. You can do that. Part of the beauty of whole life, as opposed to term insurance, which I'll tell you about later, whole life has cash value, and that cash value grows tax deferred. And you can utilize that cash value while you're still alive for whatever you want. So over the last 2 years, I had a fair amount of people taking loans against their policy, so it doesn't show up on a 1099. They're not paying taxes on that money, but they needed a lifeline. They needed a quick 5-10 grand so they don't lose the house because the mortgage is 3 months behind
Mhm.
or something else. So they can utilize that cash value of the whole life policy to fund those kind of things. But whole life in general is a contract that's designed to be there forever. The premiums never change. If you do it right, you only pay on it for a limited amount of time, and then it's paid up forever. And ideally, the younger you are when you set something like that up, the better health, the better medical ratings, the lower the premium. Those are all big wins. But I see a lot of clients that don't do that when they're young, and they may have term insurance, which is relatively inexpensive, but it's designed to only last, say, 10 to 20 years. So there's a lot of clients that get to be about retirement age, and you're going over Social Security, you're going over the retirement plan. They realize the only life insurance they had was their work insurance, and they still want some kind of permanent coverage. And that's where whole life can come to place because it will last forever. But then they're paying more at that time because they're older versus if you do when you're younger and you give that cash value time to grow tax deferred over a longer period of time. That's another asset class that you can use as you need to, whether you're trying to generate an income stream from it later, or you want to go buy a boat or a second home. Ideally, it's your money. Use it how you need to, but it's a wonderful living benefit if we do it right. So it can be a very nice asset, and a lot of clients have it if that's what their needs justify. That's fine.
So what's the minimum policy? Like how would one start? So like,
Yeah.
we have a lot of agents who, they're in the business of, flipping or,
Sure.
investing in real estate in general,
Mhm.
and they want to start a whole life policy.
Yeah.
Like you said, borrow, against it or with
Mhm.
it.
Yeah. So there's really two ways we can do that. One, I'll pick on another real estate agent I know. She works in this area. Great lady. I've known her for a long time, and she gave us about $150,000 in cash, and that's atypical, but it's an example. And it gave her a paid up policy, and the benefit was north of $500,000 because she has one young son. She's a single mom, and she wanted to make sure he could carry on if something happened to her. But then she started dabbling, wanting to flip homes. And she started pulling out of that cash value in order to do that. And if she wanted to pay that loan back after she sold the home, she could. If she wanted to pay the interest, she could, but she doesn't technically have to. And the policy is still there. It'll always be there. But then she can utilize that money for things like that. And she's done exactly that. And I have other clients that will have a smaller policy. Maybe it's worth, 50 to 100,000. They're putting an X amount of premium into it, say $100 or $200 a month. And 5, 10 years later, they want to pull out some cash value to flip those kind of homes. And they can do that. It really just depends on what part of the structure they're in. Do they have a bunch of money and they're trying to let it sit there and grow tax deferred and have a very small rate of interest? If they're trying to pull it out, that's fine. We're also one of only 7 companies in the world that has what's called a participating policy, which means if you're taking a loan against a cash value, your dividend doesn't drop to the ground. A lot of companies out there, they love talking about their dividends, and that's great until you take a loan against it. And then all of a sudden you are getting a much lower dividend because of the loan. We don't do that. You're still earning a dividend on the whole value of the policy that you have. The policy is used as collateral for the loan, but we're not really taking the money out of your cash value. And that actually makes your operating expenses for that loan very, very low. So a lot of people utilize that as an option. And ultimately, I can work with you on an individual basis to figure out what are you trying to do and what's an appropriate way to take care of it for you. There's some things we can talk about in broad strokes, and that's fine. But ideally, I can talk to people one-on-one and try to help them with their situation.
So going back to this agent you spoke of.
Yeah.
As an example.
Yes.
So you're saying she put down 150 cash.
Yes.
But the policy was good for how much?
It was 586,000 off the top of my head. So if we lose
So that she could borrow against that 586?
No, let's be clear. And this is a little bit of something that if you're watching TikTok videos that I've seen out there, they get this part wrong. You're not taking a loan against 586,000. That's not the case. You're taking a loan against the cash value that you have. So in her case, she came with some money. She gave me 150,000. She can take a loan out for up to, say, 95% of that 150 grand. Ultimately, if we have a claim to pay out and she still has a loan against it, the claim will neutralize the loan. The family will still receive the benefit tax-free. But she's not taking a loan for $500,000 because she doesn't have $500,000 in it. She's taking a loan against the cash value. And ultimately, in a final claim benefit, the family will only receive the death benefit. But the cash value is something you can utilize while you're still alive. And that adds a whole nother realm of viability to that kind of contract. Because it's not the traditional kind where if you outlive the term or it's only good if you're not breathing. That's not the case. The whole life policies now have a lot of living benefits to them. And I see people use it all the time, depending on their situation. But a lot of times it gives them a lifeline or it helps them dabble in things like flipping properties, things like that. And then they don't need to deal with the banks or applying for loans. There's no credit checks. You want to take a loan against a policy? We'll talk about it. You'll tell me how much you want. You sign here and we give you a check. It's really about that simple. There's no loan application process because it's really your money. I'm just helping you use it.
So does she then still pay in every month, make contributions?
Well, in her case, the original life insurance is all paid off. As far as the loan is concerned, the interest comes due once a year. She can contribute money to it whenever she wants, but there's no pay structure. It's not like the first of the month she's got to send a life insurance company a check because technically she never has to pay the loan back. But over time, she will want to pay it back, and we'll talk about a good way to do that. But quite honestly, we've also used that to pay off credit cards and other things that had much higher rates of interest. And at one point in time, she had over $30,000 in credit card debt. And some of these places were charging her over 20% in interest, which was just obscene in my point of view. So I helped her figure out an appropriate way to deal with those things, save her a bunch of interest, have her money go to a better place than the bank's interest ledger, and try to help her. Because ultimately, I'm trying to be a good asset for my people. And in that case, we were able to help her out quite a bit. And she never even knew we could do it. We were just talking and she told me about this problem with the credit cards and I helped her figure out a way to do it. So, yeah.
Yeah, just saving that 20% interest alone on that.
Well, and that's huge. And I'll take that out to car loans as well. One of the fringe benefits when I'm dealing with people is auto insurance. And I work with a lot of people there. I work with a lot of unions in the area as well. And I talk to these groups of people, and a lot of them will have higher rates of interest on car loans, whether they're getting them from various dealers or they're buying them from a used car retailer, etc. And sometimes they're getting juiced on the interest rate 8 to 16%, John. And we have a company credit union that our clients can use. And more often than not, they have to have a credit score of 650 or higher. And a lot of people do. And then they can get the loan for a lot more reasonable rate. Even if it's an older car, they can probably get it closer to 5 or 6. If it's a brand newer car, they can get it for 2 to 3. I know a union plumber who I've known a long time, bought, I think it was a Chevy Cruze in 19. And in all fairness, his credit wasn't the best at that time. And GM is getting him for north of 7%. I'm helping him refinance with a credit union for under 3. Not because he asked me to do it, and I don't make a dime off it. It's just something positive we can do to help him. And I want to help the guy. So those are all good things where you can use your own money to help you rather than paying too much interest on things. Does that help?
Yeah. Is there a minimum or maximum contribution they can make? Like to get their whole policy started?
Minimum contribution, the bare minimum you're looking at is a $50,000 policy. Round math, you're probably looking at $100 a month, give or take the person's health and age and those kind of things. But I'm relatively close, and we can work through their individual situation. And even if they've had some health issues or high blood pressure or such, it doesn't preclude them from coverage. And if they're under 50, they might only need to do a medical interview for up to $1 million of coverage. Sometimes they need to do a physical, and a lot of people do, and that's okay. And then ultimately underwriting makes an offer, and we decide how we want to proceed with that. Do we want to make any changes from the original plan, or are we good to go? And that's okay. So you can start pretty small, or we can get going a lot bigger than that. I deal with a broad cross section of people. So you just try to figure out their situation and help them, whether they're a business owner or they're out of college renting their first apartment.
Mm-hmm. It's interesting because, you know, as agents are 1099.
Yes.
So.
Yes, they are. Yep.
It's definitely something I think is beneficial for them to look into.
So common things with 1099s. Here's a couple of hit list items. I deal with this all the time in your profession and others. There's a lot of employers, they don't want to give W-2s anymore. They want you to have a 1099. How do we deal with health insurance? I deal with it for a lot of people, and that's fine. Sometimes they're getting it through a spouse's work, and that's great. Sometimes that's not an option. So I do help a lot of people with that. If they're a 1099, no one's helping them with retirement, and I can totally help them out with that. In addition to all these other items, and the office can email out my list of services to all of you. And those are a few common things that a lot of 1099 workers need. Some of them need business insurance because of whatever they're doing. And I help a lot of clients with that too. I was helping one of my guys who frames homes earlier this morning because he's expanding into Indiana. He's hiring guys out there. So we need work comp for Indiana. And whether your people are one-man operation or one-person operations, or they have staff, those are all things that we should make sure are taken care of as much as they want it taken care of. So in a crisis, they know what they can get help with, or they know they're on their own. Yeah, the 1099, you got no HR department helping you. You've got no corporate 401k matching, none of that. So quite honestly, a lot of 1099s need more help getting themselves set up because they don't have the corporate office doing certain things for them, but they also have a lot more freedom than people that have to sit behind a desk 9 to 5. And that's the beauty of that kind of operation. They can come and go as they please. They want to go on vacation. They're not limited to 2 weeks a year or whatever. And that's a huge upside that a lot of people wish they had, was that level of freedom. And I love it. I absolutely love that kind of thing.
Do you want to give everybody your contact information and address again, just so
Sure.
that they have it?
Sure. So my name is Jim Andresen, Andresen. I'm with Country Financial in Tinley Park. My office address is 17605 South Oak Park Avenue, Suite C as in Charlie, Tinley Park, Illinois, 60477. My best number is 708-633-6490. You can call or text me at that number, that's fine. And I'll make sure I leave that with the office and they can email that out as well. And and we'll go from there. And if you have certain questions about your own situation, or you're trying to help make sure your deals close on time, I'll try to listen and help you and go from there. And I hope you like the meeting today, and I hope you learned something good out of it.
All right. Well, thank you very much for your time. We appreciate it greatly, and we look forward to seeing you at the grand opening in a few weeks.
Looking forward to it. It's right down the street from my place.
Right down the street.
Block away.
That's right. We'll have to walk across the street to Bailey's when we're done, or Cousins or
I
something.
have a chair there reserved for us.
Nice. That works. And the weather will be nice, and we can use it
Hopefully.
outside area too.
Hopefully, that's what we want to do. Do it like a tent thing, maybe.
That'd be fun.
I got a